Today, Bitcoin continues to move higher to end the week. Ben McMillan of IDX Digital Assets weighs in on this week's wild ride for crypto, and Resy co-founder Ben Leventhal explains how his new Web3 project would allow for diners to pay for meals in crypto. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies in the green to end a wild week of trading, with Bitcoin climbing more than 0.5% in the past 24 hours, but falling below $60,000 as of noon Eastern. Ether jumped nearly 2% to more than $2,500. Solana, however, fell nearly 6%. Now, starting yesterday and into this morning, major cryptocurrencies resumed their rebound from the big sell-off earlier in the week, with Bitcoin topping $60,000. Now, the market has been trying to find its footing after it sank on Monday as the unwinding of the yen carry trade deleveraged markets and U.S. bond yields rallied on worries of a recession. Bitcoin briefly fell below $50,000 after trading near $70,000 the week before. Recession worries first kicked in last Friday following the weaker than expected July jobs report. Now, for the week, Bitcoin is down 4.5% as of noon, on pace for the cryptocurrency's second straight negative week after falling nearly 8% last week. And Ether is down nearly 15%, on pace for its worst week since November 11th, 2022, when FTX filed for bankruptcy. Taking a look at crypto-focused stocks, most are in the red to end the week, with the exception of Coinbase, which ticked higher by more than 0.5% as of noon. However, Coinbase is still down more than 5% week to date, on pace for the stock's third straight weekly loss. For more on crypto's volatility this week, I spoke with Ben McMillan, Chief Investment Officer of IDX Digital Assets. He weighs in on what was behind this week's sell-off and what to expect in the coming weeks. What a week it has been. We kicked it off with crypto markets getting hit with a steep sell-off amid a sharp drop in financial markets around the world. Some analysts attribute this week's sell-off to heightened recession fears and escalating tensions in the Middle East, just to name a few reasons. At one point on Monday, Bitcoin was trading below $50,000 for the first time in 6 months. As the week progressed, Bitcoin recovered some of those losses. Now, yesterday, Bitcoin and Ether surged, with Bitcoin climbing back above $60,000. And this morning, Bitcoin maintained that level. Now, the rise in crypto prices coincided with a rally on Wall Street following new labor market data out yesterday, which boosted investors' confidence in the U.S. economy. So I want to start off by asking you what you think was behind this week's sell-off. And I'm also curious to get your take on what's causing markets to turn around now.
Yeah, the big culprit, of course, was, the so-called Japanese carry trade. When Japan increased their rates last week, their benchmark rate, a lot of people were expecting 10 basis points. They came in quite a bit hotter than that. And, markets were starting to unwind because a lot of people over the years have been borrowing in yen because the cost of carry is very low, and they've been buying risk assets abroad, including places like the United States. And so it doesn't take a lot of increase in that cost of financing those positions to basically force an unwind. So that was what contributed to the rapid sell-off that we saw over the weekend. When you look at crypto in particular, the crypto markets, of course, are no stranger to excess liquidity. We've been talking about this for literally years at this point, especially in the Asian markets. And that was even further exacerbated among crypto. There were some large liquidations happening over the weekends, Saturday, Sunday into Monday, which I think is why we saw, Bitcoin kind of wick below that $50,000 mark. And, as you said, a lot of that was predicated on, not just the carry trade unwinding, but renewed concerns about a global recession. That has since abated somewhat this week. As you mentioned, the job numbers came in, a little bit stronger than people expected. But it's definitely, there's still macro weakness. We've seen, a big bounce back in risk assets, crypto in particular. A lot of that is also liquidations on the short side. Even yesterday, we've seen, I think in the last 24 hours, roughly $100 million of, liquidated shorts. And so, it's a real test here. Technicals matter for Bitcoin. If you look at the 200-day moving average, which is, very popular benchmark for a lot of risk assets, but crypto as well. It's trading right around that level. 60 to 62,000 is kind of the important resistance level that if investors want to see sustained upside, I think Bitcoin's got to break through that. Otherwise, there remains risk to the downside. So the drop in prices this week has eaten into Bitcoin's gains for 2024, but Bitcoin is still in the green, with the cryptocurrency rising about 43% since January as of this morning.
What's your outlook for Bitcoin in the coming months? Do you think we'll see those record highs we experienced back in March above $73,000 once again? And if so, what would it take?
I think it's certainly achievable. The big question is exactly what you said. What would it take? So I think there's kind of, a few things to consider. The first, of course, is whether or not, we do fall into a recession. Historically, this is something we've been keeping a close eye on this entire year. If you look historically, it's not necessarily when the yield curve inverts that kicks off the recession clock. It's when it starts to de-invert that the recession is near. And that's where we are right now. So that's something to keep an eye on. Unemployment, of course, is what everybody's been focused on. Those were the concerns, I think, earlier with the jobless claims. If you look under the hood of the jobless claims, it's not necessarily as strong as a lot of people think. A lot of full-time jobs have been replaced by 2 part-time jobs. That isn't great for the U.S. consumer. And by the way, talking about the U.S. consumer, they're historically stretched. You look at default rates across credit cards, autos, even increasingly homes. That's ticking up. And so, that's a big concern because, any kind of recession is going to, manifest in a risk-off trade as it relates to, things like crypto, things like, high multiple tech stocks. So that's the key thing to keep an eye on. The other one I think is election. Specifically as it relates to crypto. Last time you and I spoke just a couple of months ago, we talked about the impact that these crypto PACs, these super PACs were having in the crypto lobby was having on, congressional races. And, that continues. I think, with the Republican rally, Trump came out with a very pro-crypto stance. There's been talk about even a potential, national treasury for Bitcoin. I think there's a lot of hurdles to that. But I think the fact that that conversation is even seriously being had is actually quite bullish for crypto long term. And even, if you look at the Democrats, that have historically not been that friendly to crypto, the Harris camp has started reaching out to, different parts of the crypto community to kind of get up to speed. So I think that's a good sign that politicians, irrespective of where they are in the political spectrum, are starting to take crypto seriously. I think that's good longer term, for things like regulatory clarity, even the legislative backdrop. And then the other one too is you just look at where we are in Bitcoin's adoption cycle, and it continues to increase. Of course, the launch of the BlackRock or spot Bitcoin ETFs. Several months ago, but in particular, BlackRock getting into the game along with bigger names like Fidelity, that's good from a crypto adoption perspective. That starts to kind of mainstream the asset class. A lot of people who wouldn't have seriously considered it in the past are now starting to look at it in the context of broader portfolio asset allocation decisions. So all of those are very constructive for Bitcoin longer term. In the near term, of course, it's really the macro considerations, but I would not be surprised to see all-time highs in the back half of this year.
And it certainly will be very interesting to see if that happens. Sticking with crypto ETFs, obviously Bitcoin and Ether are gaining back ground after that sell-off earlier in the week. And what was different for crypto from prior sell-offs was that many more investors were vulnerable to the newly launched spot crypto ETFs. In fact, this week, analysts at Bernstein said in a note that unlike previous cycles when it was harder to invest in Bitcoin through crypto exchanges, Bitcoin ETFs are now live and highly liquid, trading around $2 billion a day. The analysts wrote that they expect more wirehouse approvals into Q3 and Q4, thus providing further on-ramps for asset allocation to Bitcoin. Do you agree? And how do you think spot crypto ETF investors in the U.S. were impacted by this week's sell-off?
Yeah, that's kind of been the $1 million question, is to look at how this cohort of investors would behave in an environment like this. The joke on online, of course, is anybody that's been in crypto as a holder for any kind of length of time, this type of volatility is just matter of course. But now, of course, now all of a sudden we've had, as I said, more of Main Street starting to get into crypto with these spot ETFs, and this is a lot of volatility, more than a lot of them are used to. And I think we've seen that contributing to more buying and selling, people getting in, people getting out, more volatility in the flows. The great irony in all of this is we've been asked for years, going back to 2019, if we thought volatility would subside in this asset class as investors started moving in, particularly institutional investors. And we said, no, we thought it could actually be the opposite, because as this becomes easier to trade, on things like exchange traded funds, it lends itself more towards active trading, not unlike we've seen with things like volatility ETFs or ETPs. So, and if you look at the profitability, the implied profitability or cost basis of a lot of these newer vintage buyers, it's right around this level too. So it's interesting to see how ETF flows have kind of responded to this volatility. I don't think the volatility is going to go anywhere. I think, in fact, if anything, we're going to see it increase within this asset class potentially. But again, longer term, that on-ramp into this asset class is going to be, I think, supportive of prices, but it's going to be a bumpy ride in any direction.
All right, for our main story, Crypto World's Tanea McKeel caught up with Resy co-founder Ben Leventhal earlier this week to discuss his new Web3 startup, Blackbird Labs. Last week, the restaurant loyalty platform founded by Leventhal announced the launch of Blackbird Pay, which is a system that will allow participating restaurants to accept payment in crypto.
I'm very excited to talk about this new app. I actually used it over the weekend in advance of this interview. I loved it, and so I'm excited to hear from you about it. So to begin, tell our viewers a little bit about it and specifically what problem it is you're trying to solve with it.
Well, Blackbird is a loyalty and payments app and platform built for the restaurant industry, built to connect restaurants and guests directly. We think that there's been an erosion of this relationship between guests and restaurants. There's lots of technology and lots of apps that have inserted themselves in the relationship, and the intimacy that used to define relationships between guests and restaurants, the intimate magic that happens when you become a regular or you find a restaurant you love and you connect with somebody there, it's largely gone away. And we think there's a real opportunity to restore it and to essentially restore that magic of restaurants. And while doing so, improve some of the economics that restaurants face.
Can you go a little bit further on the economics? What exactly does the restaurant gain from signing on to the platform?
Yeah, well, the most direct thing in terms of economics is processing. So today, processing in restaurants is very expensive. The premium credit cards especially charge really high fees to restaurants, 3.5%, give or take, for a swipe. We think that's extremely expensive for a transaction when somebody's sitting there in the restaurant, having food on the plate, being present. It's a lot of money for that transaction. Restaurant margins are very low to begin with. So that to us creates an opportunity. So simply, the economics are better when you process with Blackbird. They're closer to 2% for the restaurant.
And how is it that you're able to ensure those lower fees?
Well, we are doing two things. One is, in the short term, we're making an investment in the restaurant industry. We're funding some of the processing against those premium credit cards. But our long-term vision here is to build a new processing network. So some of the transactions we're processing already today, we're processing, in fact, on the blockchain, and we're moving money from consumers to restaurants at extremely low cost. But this is obviously a long-term bet. As I said, consumers are wedded to the kinds of cards, the things they use to pay today. We know that some of those transactions are going to be expensive in the short term, but in the long term, we strongly believe that we can build a network specifically for the restaurant industry where Blackbird can have a really good business and we can help restaurants improve their margins.
Which blockchain is this built on?
We're building this on Base.
Why did you choose Base?
We like Base for a bunch of reasons. We like, generally speaking, the partnership we have with Coinbase and the Base team. Jesse and his team at Base really, I think, share our vision for what the blockchain can do and how it can unlock opportunities of all kinds for companies like Blackbird and for industries like the restaurant industry. But practically speaking, other than generally the partnership, we like the potential, speed, and robustness of the network and the cost that we can process transactions.
How many restaurants in the network currently? And if you could give me, to the extent that you can share, sort of the roadmap that you're working with from the time that you came up with this idea to now, how large has that network grown and over what period of time and at what speed?
So we are not necessarily sharing real-time numbers about restaurants, but what I will tell you is that we've grown the business more than 10x since we started about a year ago, and we plan on being above 1,000 restaurants by the end of the year, primarily in New York and San Francisco.
Now you'll be able to check out more of those interviews with Leventhal and McMillan over at cnbc.com/cryptoworld. Okay, that's all for this week, but we'll be back again on Monday, and we'll see you then.